Hello everyone, PS from PS Invest Plays here today. At one point, Kulicke and Soffa Industries, or KLIC, stock was up 133% in 2021, but then it shed 34%. Many analysts think that it is still overvalued. Is this true? Or can we expect higher stock price in the future? In this video, we will understand its business, its financials, its future growth outlook, and review its chart using Elliott wave to see how we can make money. So, stick around. I think you'll like what I have in store for you today. Kulicke and Soffa Industries, ticker KLIC. Kulicke and Soffa, or KLIC, is a leading provider of semiconductor, LED, and electronic assembly solutions serving the global automotive, consumer, communications, computing, and industrial markets. It is headquartered in Singapore. KLIC will likely look back at 2021 as a very productive year. The top and the bottom line, for instance, have soared higher and the stock has gained 76% year to date, better than most. That last number might not sound bad at all, but the stock is also way off its highs. At one point, the stock was up 133% in 2021. The stock reached its high for the year in early September, but then proceeded to decline over the next 6 weeks, losing 34% of its value along the way. The stock tried to rally in recent weeks, gaining 39% by early December, but it crashed once it was revealed that top executives at KLIC had sold some of their stock. The stock lost 14% that same day. Selling by top executives always gets noticed, even if the selling of shares does not necessarily imply anything. Still, the act of putting large number of shares up for sale puts downward pressure on the price of the stock. It gives rise to all sorts of speculation, even if there is no evidence to back it up. It also provides ammunition to those who are bearish on KLIC for whatever reason. It's worth mentioning that short interest has soared higher, especially in the last 3 months, which coincided with the stock struggling. According to the most recent data, short interest has reached 7.5 million, roughly 4 times what it was 10 weeks earlier. The selling by top executives will only strengthen the conviction of the bears. The stock trended higher for most of 2021, despite some ups and downs, but that seems to have changed. In addition, there's another factor driving a change in sentiment towards the stock. Revenue and earnings have shot higher in recent quarters, but growth is expected to slow down for several reasons. Additionally, KLIC has a limited production capacity, which it has in the past stated is sufficient to ensure around $450 million in revenue per quarter. That limit has been reached, which means top-line growth will be harder to come by. KLIC is still doing fine according to the latest numbers. Q4 revenue increased by 173% year over year to $485 million, a new record, breaking the old one set just 1 quarter earlier. GAAP EPS increased by 740% year over year to $2.10, and non-GAAP EPS increased by 520% year over year to $2.17. Both new records. Fiscal year 2021 revenue increased by 143.5% year over year to $1.5 billion. GAAP EPS increased by 596.4% year over year to $5.78, and non-GAAP EPS increased by 546.3% year over year to $6.14. In comparison, the targets set 3 years ago were $1.2 billion in revenue and non-GAAP EPS of $4.30 by 2021. KLIC beat those targets by 25% and 40% respectively. Bookings totaled $2.18 billion in fiscal year 2021, up from $646 million in 2020. KLIC ended 2021 with a backlog of $787.2 million. The weighted average of shares outstanding rose from 63 million in 2020 to 63.52 million in 2021, which reduced 2021 EPS by 14 cents. The huge year-over-year gains really stand out. 2021 was without a doubt for the record books. Its true business is way up, but easy comps are also a factor, resulting in headline numbers you don't get to see all that often. However, comps will turn against KLIC in the coming quarters. The chart below shows how quarterly revenues spiked higher starting in Q1 2021 when revenue jumped by 50.6% quarter over quarter. Revenue has spiked higher for the last 4 quarters. But this also means that Q1 fiscal year 2022 will not benefit from comps the way prior quarters did. The base will be much higher going forward, and comps will be a lot more difficult. Headline growth in the coming quarters will be much less impressive going forward. There are also signs of this in the outlook. Guidance calls for Q1 2022 revenue of $440 to $480 million, an increase of 71.7% year over year at the midpoint, but also a decline of 5.2% quarter over quarter. The forecast expects non-GAAP EPS of $1.88, plus or minus 10%, an increase of 118.6% year over year at the midpoint. It's also less than the $2.17 in Q4. Growth seems to have peaked. 2021 was an outstanding year, but 2022 is shaping up to be a different year. Capacity constraints and difficult comps will make sure of it. KLIC itself expects 2022 revenue to be comparable to 2021, which implies revenue of around $1.5 billion. Keep in mind that $1.5 billion was also the number given for 2023 revenue at the most recent Investor Day. It's worth mentioning that even though top-line growth is expected to remain flat in 2022 and 2023, KLIC does have other options to drive bottom-line growth. A better product mix, for instance, can also drive earnings higher. KLIC is releasing new products, including those that come with higher margins. If the product mix in 2022 is composed of more higher margin products than before, gross margins should rise along with earnings. The stock can still go higher even with the top line staying flat. The fact that multiples are where they are makes it easier. 2021 was a great year for KLIC. Revenue and EPS soared higher, but the flip side is that there will be less of it in the next 2 years. Sentiment towards KLIC seems to be turning negative, which is reflected in the rise in short interest after the stock peaked in September. It's no wonder the stock sold off when KLIC executives sold their stock. It reinforced the assumption that KLIC has peaked, and it's only downhill from here on out. The fact that it came at a time when the stock market is facing a number of challenges of its own does not help. While some may decide to abandon KLIC with growth slowing down and the stock stagnating, I remain bullish on KLIC. Long KLIC is still worth pursuing with multiples where they are, but patience will be needed as the road ahead could be a bumpy one. Sentiment may have become too negative. The insider selling looks to have been a one-off event and with no further selling. While revenue is not likely to see much growth, it's unlikely to shrink either. Earnings can still surprise, especially when expectations are low, and that could help the stock surpass the September highs with multiples where they are. The stock can still go higher, just do not expect it to be as easy as it was in 2021. This is also indicative in the charts where I see the stock price to experience further pullbacks before it increases considerably in the next 5 to 6 years. Now, let's take a look at the chart of KLIC. Sorry for the interruption, but I wanted to take a moment to remind you that if you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. With that said, let's get back to our analysis. Looking at the chart of KLIC, the bull run that started way back in 1970s is still not over. It has completed its first 3 waves and now wave 4 is in progress. Wave 4 is typically 38.2% to 50% retracement of wave 3, which means that it has strong support at $38.25 and strong resistance at $52.35. This, to me, is the accumulation range for KLIC. After wave 4 is completed, I expect wave 5 to resume, which is typically 61.8% of waves 1 to 3, giving us a final price target of $104.49, which translates into a 85% profit in the next 5 to 6 years. Now, let's summarize. At its current price, nibble any pullbacks and accumulate corrections. For me, the accumulation range is a price between $38.25 and $52.35. I recommend that you hold KLIC stock for at least 5 to 6 years, as I see a price target of $104.49, which translates into a profit of 85% in the next 5 to 6 years. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.